In your 40s, money and life feel different. You might be earning more than you ever have, but your responsibilities and choices also grow. That makes this decade a high-impact time for your future. Decisions you make now can have a big effect on how and when you retire. You are old enough to see the future clearly and young enough to make real changes. This is a chance to take control of your money story. Start with a clear picture of where you stand. Look at your income, your debts, and your spending. Notice where your money goes and find places you can redirect cash towards savings and investments. Checking your net worth on a simple spreadsheet can be eye-opening. Knowing your starting point helps you set goals and make choices that support them. Define what you want to achieve. Think about short-term goals, like fixing a room or taking a family trip in the next couple of years. Think about midterm goals, such as saving for your kids' college in the next 5 to 10 years. Long-term goals could include paying for weddings or enjoying your own retirement. Break each goal into a dollar amount and a date. Goals that are specific, measurable, achievable, relevant, and time-bound give you a roadmap. If you did not set goals in your 30s, there is no time like now to get started. Earning more can tempt you to spend more. This is called lifestyle creep. In your 40s, you often enter your peak earning years. More cash flow makes it easy to justify nicer things and luxury. Big purchases like a larger house, a new car, or a dream vacation can slow your progress toward wealth. Review your budget before taking on big-ticket items. Ask yourself whether these choices line up with your long-term goals. Spending consciously helps you build wealth instead of draining it. Keeping your future secure means having cash on hand for surprises. Aim to keep about 6 months of living expenses in an emergency fund. If you have dipped into this fund or your costs have grown, replenish it. A larger family, a new home, or starting a business can mean you need a bigger cushion. This fund lets you cover unexpected car repairs, home repairs, or job loss without going into debt. High-interest debt can be a drag on your progress. Credit card balances and personal loans often charge very high rates. Use a focused strategy to get rid of them. Pick a payoff method and stick with it. Every dollar you free from high-interest payments is a dollar that can grow for you. Your 40s are a powerful decade to boost your retirement savings. Contribution limits for workplace retirement plans such as 401k, 403b, and 457 accounts allow you to save significant amounts. In 2025, the standard employee limit is $23,500. And if you are age 50 or older, you can add a catch-up contribution of $7,500. These extra contributions give you a chance to accelerate savings. Starting in 2026, high earners who make more than $150,000 will need to put their catch-up contributions into a Roth account. Paying taxes now may feel hard, but tax-free withdrawals later can be a gift to your future self. Even if retirement feels far away, automate your contributions so you save before you spend. Small increases now can compound into big balances later. Think about education costs for your children. College prices keep climbing. A 4-year private education can cost more than $200,000. You can use a 529 college savings plan, which allows your money to grow tax-free and be withdrawn tax-free when used for qualified expenses. Remember that your kids can borrow for college, but you cannot borrow for your own retirement. Balance these goals by setting clear amounts for each. Talk openly with your children about what you will cover and what they might need to contribute. Protecting your family and assets becomes more important as you build wealth. Review your health, life, disability, and long-term care insurance. As your income grows, check whether your existing coverage is still enough. Consider umbrella insurance to guard against legal risks. If you support others with your income, life insurance ensures they will be cared for if something happens to you. Disability insurance can replace part of your income if an illness or injury stops you from working. Long-term care planning helps you prepare for the possibility of needing help with daily living later on. Updating your estate plan is crucial. Life changes like marriage, divorce, children, or new assets mean your will and trust need attention. Many people forget estate planning in their 40s. Review your beneficiaries on retirement accounts and life insurance because those designations override your will. Make sure you have a durable power of attorney and a healthcare proxy. Choose someone you trust to make decisions if you cannot. Talk with your parents about their plans too. Knowing their wishes can avoid stress later. Stay educated and adapt your strategies. Keep learning about tax planning, investing, and retirement rules. Inflation can erode your buying power, so invest in assets that have growth potential. Being too conservative with your investments can lead to missed growth. Some advisors note that focusing only on term deposits may be fine for short goals, but in your 40s you have time for investments to grow. Diversify your portfolio across stocks, bonds, and other assets. Rebalance at least once a year so your investments stay aligned with your goals. Consider working with a professional if you feel unsure. Good guidance can help you avoid costly mistakes. Your career is part of your wealth plan. Reflect on where you are and where you want to go. Additional training or certifications can increase your earning potential. If your pay has not kept up with your skills or inflation, negotiate. A raise or new role can help you save more. Balance saving with enjoying today. It is okay to spend money on experiences that bring you joy. Plan vacations or hobbies, but include them in your budget. The aim is to live well now while still funding your future. Delaying all pleasure can lead to burnout, and overspending can derail your plans. Find a middle ground that feels right for you and your family. Set a target date for financial independence. Decide when you want work to become optional. Whether that is age 55, 60, or later, having a date in mind gives you a clear goal. Increase your savings rate, pay down debt, and explore passive income like rental properties or dividend-paying stocks. Stay patient. Wealth grows over time. Make steady contributions and avoid panic during market swings. Sometimes it helps to get professional advice. A qualified financial advisor can simplify the process and provide personalized guidance. They can help you optimize contributions, balance competing goals, and structure investments that fit your risk tolerance. If meeting with an advisor is not possible, use trusted online tools to run retirement projections and track your progress. You should also talk with your parents and siblings about money. Many people in their 40s are part of what is often called the sandwich generation, caring for children and aging parents at the same time. Open conversations about wills, powers of attorney, and care wishes can save everyone time and stress later. Learning about your parents' financial situation helps you prepare for possible costs and ensures their wishes are respected. This kind of planning is an act of love that protects your entire family. As you navigate your 40s, remember that you hold the pen to your financial future. This decade offers both challenges and opportunities. With careful planning, disciplined saving, and smart investing, you can build durable wealth and enjoy more freedom in your 50s and beyond. Prioritize your goals, stay mindful of spending, and protect your loved ones. When you take control of your money, you gain the freedom to choose how you live. For more tips and support on your journey to financial independence, subscribe to Frankie Finance and turn on notifications. Thanks for watching, and see you in the next video.